Hello there. The second part of lecture series 12 on IAS 37, Provisions, Contingent Liabilities and Contingent Assets will focus on contingent liabilities and contingent assets as well as reimbursements. So, what is a contingent liability? A contingent liability is either a possible obligation that arises from past events and whose existence will be confirmed by the occurrence or non-occurrence of one or more uncertain future events not within an entity's control, or a present obligation that arises from past events but is not recognized because either 1. It is not probable that an outflow of resources embodying economic benefits will be required to settle the obligation, or the amount of the obligation cannot be measured with sufficient reliability. The following diagram summarizes the main recognition requirement of IAS 37 for provisions and contingent liabilities. In rare cases where it is unclear if there is a present obligation, a past event is deemed to give rise to a present obligation. If taking account all available evidence, it is more likely than not that a present obligation exists at the reporting date. A contingent asset is a possible asset that arises from past events and whose existence will be confirmed by the occurrence or non-occurrence of one or more uncertain future events not wholly within an entity's control. Both contingent assets and liabilities shall not be recognized. However, IAS 37 requires an entity to make the necessary disclosure for a contingent asset where an inflow of economic benefit is probable. In the case of contingent liabilities, an entity is required to make the necessary disclosure where an outflow of resources is possible. It is possible an entity is able to look for another party to pay for part or all of the expenditure required to settle a provision, for example through insurance contracts. Where some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, the reimbursement shall be recognized when and only when it is virtually certain that reimbursement shall be received. The reimbursement shall be treated as a separate asset in the statement of financial position and shall not be offset against the provision amount. However, in the statement of profit or loss, the provision amount recognized may be presented net of the reimbursement amount. The reimbursement amount recognized shall not exceed the amount of the provision. The final part of lecture series 12 on IAS 37, Provisions, Contingent Liabilities and Contingent Assets, will look at the application of the recognition and measurement rules in specific situations. Till then, thank you and have a pleasant day.